Why you are late for my lecture, Yadala Dianta?
I slept like a rock last night because of the PlayStation games. I was not able to wake up in time. Forgive me, Aweli MT.
Anta, are you Abnamyani? Or Ebsataudamer at Ce Salama? Amakminyala Anta.
Don't cause me embarrassment in front of students. Students will start calling me bad names.
Again, Anta Amakminyala.
Anna, Mona.
Your mom is very kind, and I know that you always give her hard times. You are detained and you will attend this lecture while standing on only one foot. Understood, Yala?
Enti mafcharayawi said Enti.
Anyhow, today, I am going to give a lecture about debt securities that are classified as trading securities. Precisely, they are measured at fair value through income statement. They are purchased and held principally for the purpose of selling them in the near future. They are purchased and sold frequently.
How debt securities classified as trading securities are initially recorded in an investor's books?
Good question, Mona. Each trading security is initially recorded at cost, including brokerage commissions and taxes. Upon purchasing of trading securities, the journal entry will be debit trading securities and credit cash. However, trading securities are remeasured at fair value at each balance sheet date.
If trading securities fair value differs from the cost or the carrying amount at the balance sheet date, unrealized holding gains or losses result. How these gains or losses are treated?
This is an excellent question, Mona. First of all, a holding gain or loss on trading securities is the net change in fair value during the period, not including recognized dividends or interest not received. The unrealized holding gains or losses on trading securities are reported in the income statement.
Does reporting changes in the carrying amount from changes in the fair value of trading securities cause the historical cost not to exist any longer in the account?
To retain the historical cost of trading securities in the accounts while reporting changes in the carrying amount from changes in fair value, a valuation allowance account may be established. For example, the following journal entry debits allowance for an increase in fair value of trading securities, debit trading securities fair value adjustment, and credit unrealized holding gain.
It goes without saying that trading securities are reported as current asset in the balance sheet, but how its carrying amount, earnings, and related cash flows are presented in the financial statements?
1. In the balance sheet, the balances of the securities and valuation allowances are netted. One amount is displayed for fair value in the balance sheet. 2. In the income statement, unrealized and realized gains or losses, dividends, and interest income, including premium and discount amortization, are included in earnings income statement. 3. In the statement of cash flows, classification of cash flows generally depends on the nature of the securities and the purpose of their acquisition. Trading securities are typically considered to be from operating activities.
We will certainly understand this subject in a better way if you give us an example on how to initially record and remeasure trading securities.
Okay, assume that Satauda and Ce Salama Company, S&S Company, purchased 1,000 shares of Amyani Company mandatorily redeemable preferred stock, a debt security, on October 1st, year 1, at the fair value. S&S Company classified this investment as trading securities. On March 1st, year 2, S&S Company sold all its investment at fair value. The following are the fair values per share of Amyani Company preferred stock at the relevant dates: October 1st, year 1, $15, December 31st, year 1, $14, and on March 1st, year 2, $21. You are required to make the journal entries at each of the 3 dates above and explain how you arrived at the dollar amounts.
We appreciate if you answer because the subject is still new to us.
Okay. 1. On October 1st, year 1, 1,000 shares purchased at $15 each. The entry to record this purchase transaction is debit investment in trading securities for $15,000 and credit cash for $15,000. 2. On December 31st, year 1, the balance sheet date, the trading securities need to be remeasured at fair value and unrealized holding gains or losses are reported in earnings. Since the per share's fair value on December 31st, year 1, is $14, Thus, if loss of $1 for each share need to be reported, $15 at the purchase date minus $14 at the balance sheet date. Accordingly, loss is calculated by multiplying $1 by 1,000 shares, which equals $1,000, and the journal entry is debit unrealized holding loss for $1,000 and credit trading securities fair value adjustment for $1,000. In doing so, trading securities of Amyani appears in the balance sheet of S&S Company as at December 31st, year 1, at $14,000. 3. On March 1st, year 2, all shares in Amyani Company were sold at $21 each, at a total of $21,000. Comparing the proceeds from disposals of the shares and its carrying amount of $14,000, a $7,000 should be recognized as gain in the income statement by the following journal entry: debit cash for $21,000 and credit investment in trading securities for $14,000 and credit gain on disposal of trading securities for $7,000.
Thank you. But you caused my legs to be paralyzed.
You was very active during the lecture. Do not ever be late again. Salim Liela Makmona.